Good evening and welcome. I'm Tallulah Patricia Bear. I'm the founder of AfroSwissters and the creator of the Legacy Roundtable. And I just want to share that this session will be recorded. And I ask all of you to share where you're from in the chat if you have not done so. And just something very brief about me. And that will also set the tone for this session. I was born and raised in Switzerland to West and North African parents, and I have spent most of my life navigating what it means to belong to multiple geographies at once. Tonight is our final session of this three-part series focused on the bridge between the African continent and its diaspora. This evening, we are focusing on ethical mobility and talk about what happens when we move not just physically, but institutionally, financially, and multi-generationally. A quick note on structure. I will be in this conversation with our three speakers, each of whom bring a very distinct angle from policy, finance, and of course, entrepreneurship. After that, we will open the floor for questions and wrap in practical tools and reflections. And at this point, I just want to extend a very warm thank you to Kotia, who's been my sparring partner in this project. It's just been an absolute pleasure to work with you, Collins, and to meet people from your region who you've brought into this conversation. So without further ado, today we're talking about the changing rules and we're asking how do we return to the African continent? How do we get in touch with the African continent? How do we circulate knowledge, not just talent? And how do we co-build systems that value our labor and our dignity? So, it is my great pleasure to welcome Anne. Anne, I would love to begin with you and ask you to briefly introduce yourself, your role, and how your work intersects with labor mobility and diaspora affairs.
Thank you so much, Tallulah. Let me just get into it and introduce myself. My name is Anne Mruche. I'm a deputy director in the State Department of Diaspora Affairs. And what really this means and how it's this role of deputy director in diaspora affairs intersects with labor mobility is that I engage day to day with our Kenyans and other diaspora in supporting the development of labor mobility frameworks that benefit both the country and its other nationals abroad. So my responsibility basically to coordinate the implementation of the Kenya diaspora policy, which was implemented or put into use in 2024. That is when it was given the mandate to now be usable and be able to put more objectives on how the diaspora affairs will work. So we also facilitate interagency collaboration and ensure effective service delivery through our Kenyan missions abroad, which are almost now we have almost 56 missions abroad, and more are going to be opened in the near future. We also contribute to the negotiation and monitoring of bilateral labor agreements, which we have done at least now 6 so far, as well as MOUs and labor mobility partnerships. This is basically to help to work and promote ethical recruitment, safeguard migrant workers' rights, and ensure their welfare. We also oversee programs that enhance diaspora protection. This includes support during crisis, dispute resolution, and consular assistance. Furthermore, these initiatives that promote diaspora investment, we also look at how remittances are brought back into the country so that they can promote investment and economic development. We also mobilize and look for skills transfer, both in and out of the country. And we ensure that Kenyan diaspora remains a key partner in the national development. So basically, my work extends into what we can bring from the diaspora, and as well look at how our human resource can be taken to where it's being needed in the international forum and international economy of different countries. We also are engaged in regional and international forums which are helping to look at ethical labor mobility in African Union, in the IOM, in the ILO, and we advocate for policies that support safe, orderly, and beneficial migration for all nationals that also include Kenyans. So basically, Tallulah, that is what I am. Thank you.
Thank you so much, Anne. What an amazing introduction. And it's really lovely to see, I believe, Crystal, you also have Kenyan heritage. So it's wonderful to have people across the pond here with us today. And before we dive into the questions, Anne and Collins, we also have Andrew with us. Andrew, you've built platforms at the intersection of finance and infrastructure. But before we dive in, could you also briefly introduce yourself, please, and tell us who you are and your focus areas?
Thank you, Tallulah, and thank you to our audience. My name is Andrew Kulankash. I'm a techpreneur in East Africa, based out of Nairobi. Today, I think I run a couple of payment companies under the Remitcore group that are within the East African region. Today, we have a remittance service provider by the name of Remitcore Money Transfer Limited that is duly licensed by Central Bank of Kenya to support diaspora remittances and any form of cross-border payments. We have the same outfit in Uganda that supports this type of transactions. And we also have a local payments company within Kenya that handles the last mile for distribution of these funds within the regulatory context of East Africa. So the group, we work with a number of entities across the world from different markets, and we handle the movement of funds. And the movement of funds that we are talking about here is remittances, which form a very significant proportion of foreign exchange and flows in sub-Saharan Africa. And just for context, maybe, as a country in Kenya, where my experience has largely been across the sector, we've seen the industry around remittances, which originate from the process of migration, growing significantly in the last 10 years, which I've personally been in the industry. I remember the first time back in 2013 when, like in Kenya, the first time that we had regulations or a framework that allows for remittance companies to operate. It started off with values below $1 billion. As we speak today, and data from the regulator as of last year, we are looking at a value of about $5 billion that comes into the country as from foreign exchange. And this today stands out for Kenya to be the highest foreign exchange earners, beating official development aid and any other form of export that today we are doing. So remittances is indeed at the backbone of this country in terms of the strategies the country has in trying to grow either locally, the markets locally, and the different aspects around reinvestment back home. So yeah, and basically my background, I'm an accountant by profession, but by luck, I found myself in the remittance space, running a fintech, which I started about 2-3 years ago. And this, of course, has been highlighted by the experiences I had previously, with the opportunity I had working for another local, or rather a regional payments company. And I'm excited here today to join everyone on the call to see how we can reimagine labor, return, and value creation in Africa. Thank you very much, Tallulah.
Asante sana, Andrew. We definitely have to get you back when we get the Swiss Fintech Association on board for an episode or more. And now over to you, Collins. You have been a vital sparring partner in this AfroSwissters Business Talk series, and you are increasingly proving how valuable it is to have a trusted entity such as you and your organization, Zaria Mobility, with diasporans such as myself and our audience to better understand or even demystify the idea of relocating or investing in Africa. As the CEO of Zaria Mobility, you have helped diasporans and international investors relocate and invest for over a decade. And before we jump back to Anne with questions, I would like to ask you to reintroduce yourself to the new audience and to just, have in a nutshell again what you focus on with Zaria Mobility.
Great. Thanks, Tallulah, and thanks to Andrew for joining us. Good evening, everybody. So I'm the CEO and founder of Zaria Mobility. We started in 2009, and the aim of the business was to help in market entry into the Kenyan market, as well as setting up the diaspora and investors into the Kenyan market. We focus mainly on market entry, advising the diaspora and investors on where to invest, where to put their money into, which sectors will work for them based on due diligence and research. We connect them with the right partners on the ground, as well as help them to establish a business, registration, and get the ball rolling, basically, and get a footing in the ground. In line with that, we also provide immigration services and relocation services to multinational companies, as well as investors who are moving to the country, who will want to start a business, and also just get work permits, immigration documents in order for them to be able to set up their company and set up their staff in Kenya and in the region. We now cover 8 countries in Africa, and we're growing. We've had a number of successful stories from the work we've done over the years. And now we're looking at basically building trust with the diaspora, with investors, showing them a different perspective of the Kenyan market and of the African market. The continent is growing, Kenya is growing. We have vast numbers of investment opportunities. And as we discuss further, you'll hear the practical lessons that what the government is doing to reinforce the diaspora to be confident about investing back home. You will hear how the remittance sector is trying also to just reinvent itself to make it easier for money to come back home. And from my perspective is to encourage investors and diasporans on where to put their money into, build on trust, build on the local partners, cultural immersion into the ground, and hopefully fingers crossed to see how we progress from there. And I'm glad to be here again.
Thank you, Collins. So over to you, dear Anne. Can you please tell us a bit more about Kenya's current strategy for engaging the diaspora in ethical labor mobility? Could you hear my question?
Yes, I did. Sorry, I was on mute.
No problem.
Can you repeat your questions, please?
Yes, if you could tell us a bit more about Kenya's current strategy for engaging the diaspora in ethical labor mobility.
Okay, thank you very much. Kenya's current strategy for engaging diaspora in labor mobility, which is ethical, it is aligned with the government's bottom-up economic transformation agenda, which is better, and as well as what I've just alluded to, the diaspora policy of 2024. So basically, these two instruments look at the approach of putting these diaspora in labor mobility in terms of coming up with bilateral labor agreements and partnerships. And as I had earlier said, we are on the verge of being proactive in establishing labor agreements with various countries so that we can facilitate ethical labor migration. And notably is a comprehensive migration and mobility partnership agreement, which was signed in Germany, which focused on making Kenyan talents to the German labor market. And rather than just fixing people in quotas, not looking at what is needed and what we have in Kenya. So this agreement, it looks at the cooperation of how we are going to get people trained in what is being needed in Germany, and looking at the workers' welfare, looking at how we are going to do apprenticeship, as well as making the agreement at a higher level, whereby two of the highest principals sign and agree to what is put in that labor agreement. Additionally, we also have a memorandum of understanding whereby we can, if we are not able to work onto one fixed labor agreement, we continue updating ourselves in this memorandum of understanding with countries like, basically we have Austria, we have Bahrain, we have Oman, Poland, Jordan, Kuwait, Canada, Ireland, and many more. Those are just few I can just point out as at now. We aim at creating employment opportunities for Kenyans abroad. So that is now bilateral labor agreements and memorandum of understanding. Those are one of the strategies that we are looking at so that we can make this labor mobility ethical. Number two, we also have, we are trying to come up with diaspora placement agency. As per now, we have just a draft, and we are looking at establishing this in the near future. This agency will be responsible for regulating international job placements, ensuring that they are ethical, well-coordinated, and they are backed by national and international legal frameworks. It will also look at how we can work towards the accreditation and endorsement of qualifications from different human resource. And basically, we are now looking at the Kenyan market, how these qualifications from Kenyan human resource will marry to the foreign countries' needs, and also to facilitate easier access to employment opportunities in those foreign countries. So we are still working on that diaspora placement agency, and hopefully it will be institutionalized and we can work further in making this more labor mobility ethical. We are also looking at how we can have support mechanism for migrant workers. For example, we are enhancing safety and welfare of Kenyan workers abroad by establishing labor migration desks. That is key points in our Jomo Kenyatta International Airport, where most of our Kenyan workers go to foreign countries. And the government has put those desks so that they can curb irregular migration and provide assistance, if need be, to departing workers. Furthermore, these help desks and contacts have been set up in countries where these Kenyans are going to, so that we can monitor also their welfare and address these issues if need arises. So that is also a part of our mitigation and a way of looking at how our diaspora are well engaged out there in an ethical manner, and they are going where they are not being mistreated, and they are not getting a raw deal. And fourth, we have diaspora engagement and skills transfer, which we are trying to recognize the potential of our diaspora out there and how we can tap from their skills that they are getting out there in the diaspora, so that they can bring back this experience they have already tapped from foreign countries, the knowledge they have gotten from there, the skills, the talent, so that it can contribute to the country's economy, social and political development. We are sure that these skills will help to open up investments in the country and also make employment upgraded in terms of putting the employment high for the population of the youth, which is rising every now and then. So that we can curb this issue of unemployment. So we are banking on our diaspora to come back and also tap on whoever is coming back, and also put on training on how they can train our youth who are here, have workshops, mentorship programs, research projects. For example, if we have our doctors out there, they can come and put up hospitals, employ nurses who are here, employ other health workers who are here, who are unemployed. We can also have engineers who are out there. They have tapped information from out there. They can come and put up something here in our country. We can have people from hospitality sector to come and make our tourism and hospitality sectors flourish. Those are different engagements that we are trying to tap, and skills to be transferred back to Kenya. We are also encouraging diaspora participation in job sourcing. Our State Department, through our PS, is also trying to have a dialogue with our diaspora out there to help get information to source job opportunities for citizens who are here. With these initiatives, we know that we can eradicate unemployment and encourage diaspora to contribute to labor mobility, discussion, and skills transfer. And we believe in this way, we will curb unethical labor mobility. We will curb rogue agencies that are trying to take our people from here to go out there and do work in a very in an orderly manner. So that is how we are looking at how we can help our people from Kenya or from different sectors to go out there and work in the foreign countries in an ethical manner. Thank you very much, Tallulah.
Thank you very much. And wow, you gave all of us so much to unpack and also dive deeper into. And one of the first follow-up questions I want to ask, as part of your Kenya current strategy, you mentioned your collaboration efforts with Germany, and you mentioned quotas, that you are trying to combat those quotas. Could you elaborate on that point?
Yes, thank you so much, Tallulah. What I want to inform about the quotas is we are looking at people who are making our Kenyan workers who are going abroad not being able to get into a system that is well documented, well established, and be able not to get into rogue agencies that make them to be in an environment or a working environment that is not conducive to them. So that is what I'm referring to, quotas that are not well documented.
Thank you, Anne. Thank you very much. And you did talk about the risks that you're trying to mitigate. Could you maybe share some of the biggest risks that your department has identified that you're trying to mitigate when Kenyans take up work abroad? And just as a side note, Collins and I, in preparation weeks ago, we did talk about a story of situations where, women get exploited abroad or are used as trafficking moles, trafficking, they get promised large sums of money, but they're actually being asked to traffic illicit drugs out of the country. So, in your opinion and in your expertise, what are some of those biggest risks that you are trying to mitigate?
Tallulah, when Kenyans take up work abroad, we prioritize mitigation of high risk challenges, like we ensure safety, dignity, and well-being of these migrant workers. And basically, these key risk areas are, for example, poor working conditions and withholding of passports. There are some key Kenyan migrant workers who go out there, especially the low-skilled workers, are very vulnerable. And the ones who are, you've just mentioned, domestic workers, they're very vulnerable. Most of them do not know their rights. So they go and get into poor working conditions. The passports are being withheld. Then there's non-payment or underpayment of wages, physical and emotional sexual abuse, which basically, as at the beginning I've just said, bilateral labor agreements are trying to put stop into this. So we ensure that bilateral agreements are well documented so that they can protect these domestic and low-skilled workers from being vulnerable to this exploitation and abuse. We also put up pre-departure trainings and orientation. And we also establish labor attaches in key Kenyan missions out there in the world. And we also monitor and enforce mechanism through our countries, our missions in the countries that are established. So those are part of our of the risks that we are trying to do away with. We are also looking at human trafficking and irregular migration. You see, most of our Kenyan migrant workers, they are not able to know who is a certified agent, who is not, and then they might come across unscrupulous agents or traffickers that they can be exploited. And we try to make sure that the agents that are trying to get in to get our workers, Kenyans, out to work, are regulated and are vetted. So that is work of our the State Department of Diaspora Affairs, in collaboration with the State Department of Labor and other agencies. So we also try to put public awareness and campaigns on safe migration. And we also, I've just said, we have labor migration desk at our Jomo Kenyatta International Airport that try to look at who is exiting and where you are going, and is it certified for you to go there? And is there any problem that you might encounter? You are being informed before you exit from the country. So we collaborate with also different agencies of the government, like NEA and anti-human trafficking units from IOM, so that we can prevent such unscrupulous agents to get into our Kenyan workers as they go out to work in different foreign countries. We also look at the risk of workers often signing to favorable contracts in Kenya only to see a different term or a different contract in the other country. So that is also something that brings out lack of transparency on these agents who are trying to take our Kenyan to work outside the country. So in that term, we as the government of Kenya, we try to standardize employment contracts, which are vetted by government authorities in the country. We also try to take these contracts to the countries where these people are supposed to go and work. They verify this through our foreign missions so that they make sure these employment contracts do not contradict from when they sign in Kenya and when they go out and sign outside there. It's the same script. Also, we make sure that there's legal literacy because most of us, we are not lawyers. There are some legal experts into this. So the Kenyan government makes sure that this document, there's legal literacy and any grievances is redressed with the workers and the agent concerned. Further, we also look at legal and immigration issues. You know, migrant workers may overstay. We've had such cases of overstay visas. We work without proper documentation, or unknowingly we violate local laws. That can happen. So in terms of that, we make sure there is a pre-departure orientation. We have also come up with pre-departure books, whereby there's different books for every country that has given out any vacancy or any job opportunities for Kenyans. We make sure as a State Department, we have pre-departure books for Germany, for example, for Austria, for example, for Italy, and any other country that a Kenyan worker is going to work abroad, so that they can familiarize with the local laws of that country to make sure that they have proper documentation and there's no overstay visas in case of a visa given. There's also cooperation with the diaspora associations that are outside there. For example, we have good cooperation with our diaspora association of Kenya in different countries that Kenyans are. This is in collaboration with our Kenyan missions, that they make sure that they bring Kenyans together so that they can have an association. In case a Kenyan worker goes to a country outside Kenya, they are able to get in touch with these diaspora associations and make themselves home, I would say, and be able to get to know what is required and what is not required, what is a violation of our local law and what is not. So that is something also that Diaspora Affairs is trying to regularize and making sure that these efforts are being done. We also have established a diaspora help desk in our State Department of Diaspora Affairs so that it can assist with legal support if need be. We are also looking at the risk of poor living condition and isolation. You know, when you out there is an issue of getting into weather or climate that is not conducive. I mean, not conducive per se, but you're not used to. And there are some also workers who are given inadequate or unsafe housing with the so-called agents who are giving them this working opportunity. And it basically makes these Kenyans to face mental health challenges due to isolation. You are not able to get to a person whom you can talk to. You are not able to air out your grievances to the employment agency that maybe is not even there to be able to see or to get in touch with. So with this, the Diaspora State Department for Diaspora Affairs tries to minimize standards to make sure to give the agent the ability to give us the minimum standards for housing and living condition in the labor agreements that we are signing, so that we can know what kind of housing or living condition this Kenyan worker is going to be having. We also try to have cultural integration programs and diaspora community engagements, as well as we have a wellness and mental health awareness program that our State Department always prepares or gives to the Kenyan workers who are going abroad to work. We also have a risk of, in case of an abuse or crisis or a job loss, or a Kenyan may face economic hardship and lack of integration support. We also provide as a Kenyan government emergency repatriation and diaspora insurance mechanisms. And we also try to reintegrate support through county governments and NGOs, as well as economic empowerment programs for returnees who are not able now to stay abroad. They come back. There is economic empowerment programs for these returnees, which we are also incorporating other agencies and other international organizations to help these returnees settle down back into Kenya. Thank you very much, Tallulah.
Thank you.
That is what I can inform.
What a brilliant representation of your government. And Crystal, I hope you're taking notes. As a Kenyan diasporan, you know exactly where to turn to if you're ever considering taking an opportunity in Kenya. And I would like to, move from a bit more friction mobility to less friction through technology. So we're moving to fintech, and that brings us to Andrew. So, Andrew, fintech is frictionless payment. I think M-Pesa was the blueprint to showcase that it is doable. And in the first and the second episode, we did talk about Kwanda and remittance payments. So please do tell us about your organization and what role does fintech play in protecting or exposing migrant workers?
Thank you, Tallulah. Yes, absolutely. So as earlier on intimated, we play a critical role in the remittance value chain in that we handle the last mile termination of these remittances. So we have different entities, or what we call, I think in Europe, we will call a payment institution. Maybe in America, they'll call it money service business, who collect these transactions, who collect these payments and are able to send this to us, and we handle the last mile. And how we handle it depends on various channels, depending on the preference of the sender or the migrant on the other side. They will decide, I want this money to be collected in cash. I want this money to be collected or credited into a mobile wallet, or I would want this money to get into a bank account, or better still, go directly and get invested in a bond, in a government bond. So all that, we are able to do this through technology or financial technology. And I would say, based on your question, financial technology definitely plays a complex role in this ecosystem, especially in the lives of migrant workers, with definitely a great potential to either protect or expose the migrants. So maybe we can look at maybe the protectionism aspect of this financial technology. Of course, fintech, or the technology that we deploy, has seen serious financial inclusion on the part of the sender or the remitter of these funds, or the migrant. And this is because you have rightly said today that M-Pesa is one of the noble innovations that has seen the payment, or has changed the payment ecosystem or space in Kenya. So through technology, we've seen a deeper financial inclusion, especially on the sender part, because today the senders can actually access digital wallets like M-Pesa. The senders can access microloans because of the fact that from the amounts that they are able to send, then they can create some sort of data that can be relied on by the financial institutions. So that becomes very important in creating financial inclusion for these migrant workers who traditionally be excluded from traditional banking systems. The other most important aspect about this is the fact that technology or financial technology has managed to reduce remittance costs. As I've said, in about 11 years for the case of Kenya, I remember when transactions were purely cash, and that is what remittance was defined as. The ability to collect cash on the send market or the migrant market and receive cash in the receive market, in this case, Kenya. So that will create a lot of friction points during the value chain of that transaction that creates a very, there are very many players in that value chain, including physically airlifting the money. So we had those instances where money will be airlifted through, postal corporations, through private entities that will move this money. But through technology, this has significantly changed. And digitalization, that's the term that we adopt in the market when we're handling our remittances, has really reduced. And this came out very clear during the COVID period, where we just realized somehow the costs went down because people could not move, people could not go to agents to send money. So they had to rely on the digital applications and portals. And somehow by tracking and through studies, like one that was a very rich study that was done by IFAD, we were able to see that through digitalization, the cost of remittances went down. We have an SDG target of reducing remittances below 3%. Today, in sub-Saharan Africa, this value stands at about 8%. So 8% is inclusive of the sender agent, is inclusive of ourselves, who are the payout agents. There are some FX costs and a lot of complaints around hidden charges, because some of these things are not clear. But through use of digital solutions, then some of this and most of this information becomes very clear and available to the senders as they are handling this transaction, and they know exactly what they are doing. And of course, with competition, we are also seeing that cost going down through adoption of these digital technology solutions. We've seen payments have become secure. Of course, we can't ignore the fact that handling of cash is exposed to the risk of theft or loss, or just getting stories that money was lost, yet someone decided to just, I'll pocket this money and I'll give stories about how it got lost. So because of the solutions that most people have been able to deploy, so the payments are more secure, more safe, and even in terms of the speed, so it becomes more instantaneous than what we'd see previously, about 3 days to pay the transaction. Today, through technology, I think all payments we are handling today is instantaneous. We are getting to a level where we are processing transactions by the second, 5 transactions in a second, or even milliseconds. So that shows you how important digitalization of these payments is. I think the other very important aspect around the protection and the use of technology is the fact that through the different platforms that are being launched, or let me say apps, for example, the sending apps that are out there. So they've realized the importance of putting in some sort of financial literacy and planning, where they provide resources for migrants to basically manage their finances better, get to understand where they can save, and basically plan for their future. Because there's definitely need for a conversation around moving our mindset from just sending remittances from for consumption to more useful use cases like savings and investment to secure the future and the receive markets. I think the other very important thing around this is the fact that from these platforms that we are seeing in the market, especially with states like Ministry of Diaspora and State Affairs, there are platforms that are now being launched by different agencies or government actors that basically allow migrants to also engage with employers, report concerns, and advocate for better working conditions. On the other side, from an exposure perspective, because again, this technology is bound to a lot of exposures, we've seen a lot of exploitative sort of activities where some fintechs will offer loans with very high interest rates, sometimes charges that are not even very clear, and so it potentially traps a migrant into a debt cycle because you're told, yeah, from what you're sending, we can see we can unlock a certain credit for you and you'll be able to, I don't know, invest in something here or there. And then all of a sudden you find that you're indeed trapped in a very vicious cycle of repayments, penalties that are not very clear. And then, of course, there are a lot of scams and fraud. I just want to maybe point out one recent, maybe about 2 months, 3 months, or beginning of this year, where there was a crypto exchange platform that a lot of Nigerians, a lot of Kenyans subscribed to, and it was promising supernormal returns through AI-powered trading. So everybody today hears the word AI and they're excited. And I can for sure confirm that there are a couple of migrants from either Kenya or Nigeria that saw this opportunity and they ran for it. And of course, crypto being the next, I don't know, big discussion around the money flows and all that. So people ran for this kind of solution, and eventually a lot of money was lost. A lot of people lost money. So you can imagine the impact that this had into the livelihoods of different people, families, the people who are supposed to get this money. And this continues a lot, and sometimes is basically, it comes from a point of lack of information. So again, this is a great exposure because of the technology that has been deployed, that maybe has not been vetted, and we end up getting pulled into this kind of scams and fraud. There's also an aspect of regulation because most of the time, if you look at fintech companies, they sort of operate in limited sort of regulation. So it leaves migrants sometimes a bit vulnerable to exploitation and unfair practices because a lot of innovation, you find that regulation is always catching up innovation. So something might happen, something brilliant, cryptocurrencies is coming up and the technology is coming up. People will easily fall for this new technology that is promising supernormal profits. And then by the time the regulation catches up, you find that it's too late and people have already lost money. There are also cybersecurity risks around cyber attacks for certain platforms that are not properly secured. For example, when you get to a platform that sends money today, you are required to put your card details. So when you put your card details, you have to put your full card details and the code behind the card. So some platforms that are not very secure can easily get that data, or someone can easily penetrate and get that data and use it for different things, that are fraudulent. I mean, we've handled a lot of transactions, a couple of transactions where someone from the diaspora says, I can see my card was run and the transaction was run through your service, but I am not aware. I probably swiped my card at a certain place, and from that time, I'm just getting some debits into my account. And I mean, we have to work around all that, going back into the whole value chain of that acquisition of that transaction to ensure that we actually refund this person their money. So I think it's just very important for us to see how we can regulate this technology, this app, and most importantly, ensure consumer protection.
Thank you.